for the older physician who is nearing retirement, I think now what I would recommend is to sort of, again, seek introspection with their partner if they have one, and go back to what's really important to them in their life, what really makes them happy. And if they can get their top 6, let's say, or their top 5 with what they have left, they're fine. It's okay, right? Understanding that is, if they leave their portfolio alone, in the coming years, I believe, their portfolio will recover. Mm-hmm. It also forces them to ask, where does work exist in where I get my happiness or fulfillment? And so for me, I would like to do anesthesia even one day a month, even one day a week, very late in life. And so if they were about to retire, but they find that they enjoy work, keep working. I mean, there's profound data that shows working, it'll seem obvious to your listeners. If you work till 66 versus 65, the portfolio traces out a certain way, right? Obviously, if you work a year longer, it benefits. But they even went down to if you work 1 month longer, it has long-lasting portfolio effects. And so if you enjoy work and you can do it a little bit on your own terms, maybe you keep doing it.
Yeah, and I think even for people that are nearing retirement, it's important to remember that you don't need all of your money right now. You need some of it, but some of it can stay where it is, and you can wait for it to recover before you're pulling that money out. So you don't have as much time, but you still have some time.
Yeah. And I fear that people who haven't mentally prepared for this exact event, which anyone who's done a plan, has sat with a good planner, or nerds out on finance like me and you, we have already thought about this. What happens if I lose half my money? And we've answered it theoretically. I'm not going to do anything. I'm not going to sell anything. I'm not going to panic. I'm just going to keep doing my monthly buys or whatever that schedule is. And that's what we're doing. But someone who hasn't gone through this exercise of creating a plan, again, you can do it on your own if you really want to, is panicking or is at risk to panic. And that's where wealth destruction occurs, is when you act out of fear, right? So again, it's normal to feel fear. I feel it, but you shouldn't act on it.
Yeah. I think the other thing about this particular market volatility is that it was so dramatic and it was so fast that even people who think they are mentally prepared for it are maybe caught off guard. So it became even harder to not act on those feelings.
Because they were saying what is always said and rarely true, and that is this: this time is different.
Right. Yeah.
Now, of course, the cause is different and the speed is different, but I bet when we look back in a year or 2 or 3 from now, the trough and the recovery will be no different than anything else.
Yep.
And just to reiterate the whole having a plan, having a strategy in place piece, hopefully those people who are nearing or even in retirement don't have 100% of their money tied up in the stock market. You know, if they need some of that money in the next handful of years, hopefully that money is in something, a much less risky vehicle that won't experience those big downturns, and that will further instill confidence. All right, this is my money that I need in the next handful of years. That's fine. It hasn't gone down at all. The rest of it, yeah, it's gone down, but we still have plenty of time to let it hopefully rebound and recover, because that's the money that's earmarked for the long term. You know, if you're 60 years old, hopefully you live a long, healthy life and you have another 30 plus years. You need to, you know, the cost of living is going to double before you die. Yeah. So we need some of that money to keep on working for the long run and hopefully grow over time.
Yeah, we've talked about the psychological preparation for a market downturn, but as you said, there is actual numerical preparation also. So your cash reserve and your allocations should be appropriate for your time horizon or your goals.